Good morning, friends. How are you today? Here's an update for BCH. Um, I'll try to go into detail what's happening. So we'll start with the one-day chart. So one-day chart, we have been assuming for a few days that 500 will act as support, which is also the 0.618 fib. If I draw the from here to the top that we got at 647, you can see that 0.618 is around 502. And so we drew this box and I shared a lot of tweets and videos that 500 should be the area where we get support. And also I like 500 because it's a psychological level, and also because the 50 day EMA is there, if you see in the orange color. So I put this green support arrow here. So if you see that we came here uh, uh, earlier, we came below the 100 DMA, which is a purple line. Then the price tried to push above that, but again, once the support is lost, it is turned into a resistance. So 100 DMA has become major resistance, this purple line. So I put this red arrow here. So the price tried once and twice, and both time it has failed. And then with that failure, the bulls have become weaker, and then the bears just pushed them back to 500. And as we hoped and assumed, the 50 DMA or the 500 level and 0.618 have all provided support. Where yesterday we saw a decent bounce, and but again then there was a pushback down yesterday, and again last night it came to $509 and again got support, and we are now at $518. So two times we got support here. So I'm hoping that this support will hold now and the price will start going up. Primarily because we already fell by uh, we already fell down by 20%. If you take this move, we already fell by 50%. We already fell by 20% here, which is half the move that we got from here to here. So that is pretty significant. And as I said, 0.618 is usually a good turnaround in to continue the bull run. So let's hope that will happen. So this is the one-day chart. So now let's go down to a smaller time frame, which is a 4-hour chart. In the 4-hour chart, our initial assumption, we started saying that this is A wave, this is B wave, and this is C wave. Let me show this wave. Then the day before yesterday, we changed our this thing saying that this is A and this is B and this is C. And we did not change C. It was always at the 0.618 or the 500 level where we hope to support. We were hoping to get support. But the day before yesterday, we thought this B, there's a chance that it will go to $590, which is completely fine. As long as this B doesn't go above this ABC is still valid. However, this was incorrect, and we actually didn't manage to go beyond $550. Although I also treated that when I mentioned that we may go above to 590, I mentioned that the safer position is to wait until we break 555 or 565. So 555 was the 0.382 resistance of the 100 DMA, and 565 was the way the B point was there. So so earlier B point was there. So but we didn't manage to cross this or this. So definitely we fell back. So this is the ABC. Now I'm saying that I changed this a little bit now. I'm going back to our original assumption that A is this. B went till $602, and after that this entire move down is a C wave. Okay, so to give you more examples of how the 50, 100 and 200 work, right? So at the 4-hour level, this is the 200 line, the 200 moving average. So just like the 50-day moving average has given here, the 200 4-hour moving average has given support. Okay, so yesterday we got a bounce, then we tried to push up again. 54-hour EMA offered support here, offered resistance here, and the price got pushed back. So I immediately posted this tweet that saying that it's getting hard to break this resistance. And there was another attempt It just came close to that, but still that could not cross. So this made it very clear for me that we may go down again. Okay, and we actually went down and then bounced and has bounced from here again, which is the 509 level, which we assume will be our support level again. Okay, and now currently at this moment the 100 4-hour moving average is offering resistance. So but I'm expecting that see, this is the one. I'm expecting that we should be able to cross this hopefully. Uh, the reason is because I further broke down into smaller count, and which is convincing me that we are done with ABC here. Obviously, this chart and analysis is based on the ABC being done. If the price goes below $500, this theory is incorrect. So if you're taking some longs here, you can use 500 or 495 or even 490 as a stop loss as well. So now let's go into a smaller time frame. Here's a smaller time frame that I have as a 30-minute time frame. So as I said earlier, this is A, this is B, and now we are done with C. Now ABC corrections are usually having 5 subwaves, then 3 subwaves and 5 waves. Okay, so A and C having 5 subwaves and A to B having 3 subwaves, right? So this subwaves 1, 2, 3, 4, 5, we recognized it very initially, and we are right, it was $70, and we also said A, B, C subwaves are also done. If you see here, A, B, C is also done. So 3 subwaves of B is also done. Then we assume that we are in the C wave. Okay. So how do I know that C wave is done? So if I start plotting the subwaves of C, so I'm starting here and I'm saying this is A, B, sorry, 2, 3, 4, 5. Okay, let me go to a higher time frame. So let me do it again. So here are the subwaves from B to C, and why I think C is done. So this is first wave, this is second wave, this is third wave, and this is fourth wave, and this is fifth wave. Now, so fifth wave has fallen below third wave. Usually it goes below this, just like it has gone here. This is the third wave ending here, this is the fifth wave ending here. This is usually how it is, but it's also okay to have it something called as a truncated fifth wave, where fifth wave goes to just level of third wave or even shorter than this. So why do I think this particular fifth wave is done? So if you go into detail here, each of the sub waves 1 to 5, 1, 3 and 5 will have further 5 sub waves. So if I zoom in, right, like I've drawn this 5 sub waves here, 1, 2, 3, 4, 5. So that's why I think our ABC correction is done, because I can see 5 waves here, 3 waves here, and finally, sorry, I mean, the final C wave, I've seen that. 2, 3, and also the fact that this green zone has acted as support twice now. It is a 0.618 level, and psychologically 500 is considered to be very cheap. People will start buying here. It's also the 50-day moving average as we see here, and it's also 0.618. So based on this fact, it appears that the ABC correction is done. Okay. There's a chance that I may be wrong as well, so we need to plan for that. There may be a chance that this will be A, B, and C. C can go all the way here and still be valid. But I think the chances for that are probably less right now. And even then, we can have a stop loss here at 500, saying that if it goes below this, then this theory is invalid. And so, what does it mean that the ABC correction is done? It means that ABC correction means that we are ready to go for the next level up. So the entire run from $415 to $647, I consider it as first wave, and the current correction I'm considering second wave, and then obviously after second there'll be third, fourth, and fifth. Okay, this could be wrong and we just drop down here, but from whatever I said right now, I mean, assuming that uh, this will hold, this support will hold, I think we'll have a third wave and a fourth wave and a fifth wave. Third wave, I'm assuming around $830. It could go, it could fall less than that as well. As long this third wave is valid, as long as we stay above 742. Because the third wave will never be the will usually be longer than the first wave. So here we are assuming that it will go till 1.618 fib, but it should definitely go above 740 according to my assumption. And I think with the fork approaching, there's a chance that there will be a sudden spike, especially because the shorts are also very high. If you see, the shorts are really extremely high. The last time the shorts were high, they were like few days before there was a spike. I mean, on November 10th itself, there was shorts were all-time high. Then the price spiked from 650 to $2,800, which is 300%, and then it actually started dropping. In even April, the shorts were already high when the price was $1,450, but still it went up by 30%. Now the shorts are like parabolic. So if the price starts going up, all of these guys get liquidated, and the price will go even higher. So let's see what happens, and hopefully you're right. So this is my chart at a very high level in terms of long-term investment. If you see that last year, this is where we got a spike here. Everybody thought that BCH died here and it could not come up with $350. This is where I first bought it. And then you know what happened in November? It just spiked up. On November, this was November 12th that has spiked up. I can't but notice the similarities. We are seeing the same green box where it is suitable for long-term investment. I've been posting this since 3 or 4 weeks, and my take is that whoever buys here for a long term, 1 year or 2 years, will always have a good returns for BCH. The only downside being that BCH will die. It'll either die or it'll again go back to this top. I'm sorry. It'll either die or it'll again go back to this particular high, which is $4,000. Now, we don't know the time frame. This may happen in 1 year or 2 years or even shorter than that. I have no idea about that. But my thought is this is definitely a wonderful zone to go for long-term buying. And I can also see the similarities that last time it was November and now it is November and we're still in that zone. So there was a lot of flat period. If you see here that everybody thought it is dead, nobody was buying it. There's a flat period here. Now also there is a flat period. There was a long time flat period where I saw a lot of whales accounts that are buying, and I posted this in my tweets as well. And now there's a spike here. Hopefully, instead of this will start going up like this, instead of stop going like this. But even when I see the risk reward ratio is pretty high, hopefully this works out. Be safe, guys, and all the best. Thank you.